we do with all of that?
What do we do with all that? We start with thinking about the time frame. And it's true that through the end of the year, maybe into January, early February, we're going to have some tough headlines. We're going to have some tough virus headlines that are going to give us bad news here and there. And I don't want to discount that. But the market now can look out further. And starting in August, September, and even through October, we couldn't look out that far because we were so obsessed with what was happening every day and every week. Now we have a path forward. We have a light at the end of the tunnel, and companies can start to look forward and actually give us some guidance on what's going to happen into 2021. I think there's a lot to look forward to here, and I don't want investors to miss that. So this is a good time to start putting money to work. Don't try to chase it. Don't try to time it. But on the other side of this, I think that value and growth battle, as much as I am tired of talking about it, I do think it's something that's going to take shape, and the economy will start to be led by more of the garden variety recovery story, which happens to be a lot of those value names.
Yeah, I mean, it's been tiring talking about it, but it is where the debate currently lies. And you could see it, Steph, this week, the push-pull of the market. The market has been able to look through a lot of the stuff that I mentioned, and you are too, by virtue of the fact that you keep buying cyclical stocks.
I do, but I do have a little bit of a balance, too. You know that. I own some secular technology stocks, but this week has been a doozy in factor rotation. So as you mentioned, we've been having the debate between better vaccine news, more clarity on the election, and I would argue I feel better about a mixed Congress than whatever president is in office, quite frankly, because it's gridlock, and as an investor, I like gridlock. And then you have versus the rising COVID cases, as you mentioned. And on any given day, if we're focusing on the vaccines and the gridlock, then cyclicals and reopening stocks work. On any given day, if we focus on COVID cases rising, then it's back to defensive growth, and we had both of that this week, right? And so you have to have balance. Now, I am obviously watching the COVID cases, right? But I think if it gets materially worse, Scott, I think you get a skinny fiscal bill sooner than expected. Skinny, meaning
I don't know
a
how
lot
much
less
worse
money,
it needs to get,
but at
right?
least something.
I don't know how much worse it needs to get. You got 155,000 cases a day. I mean, what do we want? 200? Can I get 200? Can I get 225? Can I get 250? Can I get 300? Because that is apparently where we are heading in terms of the virus cases. There is no, it seems, hope in the near term anyway for stimulus.
Well, you're right, because Congress is a mess right now. But if it gets a lot worse, then I think there's more pressure on them. In the meantime, and I said this earlier this week when we were having this discussion, I believe we're in a better place in terms of knowing about this virus, about treatments, about tests, about contact tracing, about mask wearing, and that works. And so I think we're better able to handle higher cases, even though it's a tragedy. So what I'm looking at, yeah, I'm buying some cyclicals on bad days because I'm willing to look 6 to 8 months down the road, which is what the market does. Well, it's a forward-looking indicator. And I think 6 to 8 months down the road, we will have the beginnings of a vaccine. By the way, J&J has an analyst meeting next week. I bet you anything we hear something with regards to progress on their initiatives.
I think you're going to be right. And Jason, the bottom line is the reason we're able to look past such horrifying numbers on the virus is because of the vaccine news that we got this week. You imagine where we'd be if we didn't have that? If we were just talking about 155,000 cases and deaths creeping up and hospitalization records, and if you want to talk about two maps, you put up the electoral map and you put up where the cases are exploding around this country map. I mean, that's where the conversation really needs to be. The reason why the market can get past it is because the vaccine news that we got this week has stocks up in the face of horrifying virus numbers. And your buys reflect the market's thinking. You bought Marriott.
You got it. You got it. And for me, Scott, I mean, you know, as we watch the market yo-yoing back and forth over the last couple of weeks, I think it's really spoken to asset allocation and making sure that you're taking a tactical approach. I mean, we've been highly levered on the technology and discretionary side. I mean, the efficacy news from the Pfizer trial on Monday was fantastic. And, you know, for us, I think it's really important to make sure that you're looking at some of these epicenter names. I think the story going forward into 2021 won't be like it has been this year, thankfully, but I think it'll be an earnings story versus kind of the multiple expansion that we've seen so far this year.